Good afternoon, and thank you very much for joining this afternoon's Cuppa Club. Very slight minor technical hitch, and you'll see that Paul Monaghan, CEO of Fair Tax, you'll see his name on the screen, but unfortunately, his slight video glitch at Paul's end. So we're working on getting that sorted out, and hopefully you'll see Paul in the video flesh very shortly. So very pleased that Paul, CEO and co-founder of the Fair Tax Foundation, is in the room with us. My name's Paul Pizzala, and I'm Senior Investment Manager at FX, where Fair Tax Foundation has recently launched their second community share offer, first on FX's platform. So to set the scene, the Fair Tax Foundation is a not-for-profit social enterprise that created the globally recognized Fair Tax accreditation scheme, and it's dedicated to promoting responsible tax practices. And, of course, this is a very live and an important issue. It is a very highly impactful organization. And a new concept for the FX investing community. So it's great to have Paul here to explain more about what they do and why they do it and how they do it, of course. So as usual, a little bit of housekeeping to do, and I'd like to let you know that the Cuppa Club is recorded and available as a highlighted version. That the Cuppa Club is not a financial promotion. And if you do need investment or tax advice, please talk to an independent financial advisor. As many regular Cuppa Clubbers will know, these sessions run for 30 to 45 minutes, and it's a fantastic opportunity to meet Paul and ask questions about the Fair Tax Foundation and what your investment in the share offer will help them to achieve, and of course the wider impact that it's creating in the world. So please do feel free to ask questions. We really encourage that, and you can put them in the chat box and we'll take the questions as we go along. So before we get into the meat, Paul, would you care to introduce yourself?
Hi, everybody. Assuming I can be heard okay, just apologies. I spent more time rearranging the plants behind me than I did making sure the tech worked. So apologies for that. But you've been spared my ugly mug at the very least. So there's one bonus.
Brilliant. Great. Thanks for that, Paul, and apologies to the audience and the viewers. Paul, could you just kind of tell us a little bit about you and how you got to be co-founder and CEO of Fair Tax Foundation, a little bit about what your motivation is and the genesis of Fair Tax Foundation?
Yeah, thank you, Paul. So we started the Fair Tax Foundation about 10 years ago. And at that point, responsible tax conduct was widely considered to just be too hot to handle as a topic. It was too complex, it was too controversial. I mean, 10 years ago, there were standards and accreditation schemes for virtually every CSR, ESG issue, whatever you want to call it, sustainable wood, cruelty-free cosmetics, fair trade, pesticide-free food, but not tax. No one in the CSR, ESG community would touch it with a barge pole. If you think of like a wedding, when you've got that uncle that you don't really want to invite, but you have to, and you don't know which table to put them on, well, that was us in the CSR movement. But we went ahead anyway, and in 2014, we launched the Fair Tax Foundation as a community benefit society, and we did our very first community share raise back then. And over the 10 years, we've grown into a successful social enterprise. We've got about 8 staff now. We've enjoyed a decade of steady income growth and 7 consecutive years of small trading surplus. Essentially, we believe that businesses paying tax responsibly should be recognised and celebrated, and the global race to the bottom needs to be resisted, because if everybody's undercutting everybody, nobody wins. We're rooted in both civil society and business sectors. Our board includes listed companies, Oxfam, and champions of ethical consumerism. So long and short, we created the Fair Tax Mark, the world's first responsible tax conduct, which is now regarded internationally as being the gold standard of responsible tax conduct. And something like 250 distinct trading businesses are now accredited, who between contribute about 1.7 billion in corporation tax annually. So we're pretty happy with what we've achieved in the first 10 years. But we, the management team and the board, now want to push on further.
Brilliant, brilliant. So we're talking about some big numbers already, a track record of success in terms of getting organizations to sign up. We'll maybe get into the detail of what it is that you actually do with your clients and the services that you provide. But maybe you can also sort of paint a bit more of a picture in terms of corporate tax avoidance. It's been in the press a lot in recent years, and of course we know in the context of the UK government there's a budget deficit, there's a black hole, a supposed black hole of 20 billion in the accounts. So, you know, in the context of what the UK is facing, and I know you're looking at developing the fair tax standard internationally, what exactly are we talking about in terms of how big the problem is and what you guys are doing to help fill the gap?
So again, thank you, Paul. We're talking about some very, very big numbers, and just switching the dial up a few percent actually equates to billions. So the background is something like 1 trillion of profits are shifted by multinationals to tax havens every year. And that alone, the shifting of profits by multinational, cost the UK something like 12.5 billion in lost corporation tax revenue. And profit shifting is when something like Amazon book UK income, not in the UK, but in a tax haven such as Luxembourg, or when similarly Apple will do that in Ireland, as recently been in the press this week. But I should add, it's not just big multinationals who engage in tax avoidance. Small business tax dodging is likely to be of a similar scale, albeit the techniques are somewhat different. So with small businesses, we may see things such as electronic sales suppression, where a business will have literally a till with 2 different chips, one for the tax people and one which was in reality has got the extra sales on. Or we see phoenixing in a lot of sectors. And phoenixing is when a company is liquidated and reborn and liquidated and reborn. All the income is grabbed, but the debts, including tax, are never paid. And why this matters is just this week, for example, the National Audit Office revealed that there is basically been a splurge in the registration of new retail outlets in the UK in advance of some tightening legislation. And within this splurge of new companies created, tens and tens and thousands we're talking about just in the retail sector, that what it means is an honest business that's paying its taxes and operating within the law essentially can't compete with these other outlets which have a competitive advantage. So one of the things is that there's an emerging body of evidence to suggest that businesses not paying the taxes doesn't just hurt public service provision because there's less money. It actually is a massive downward pressure on national productivity and on the ability of business to compete fairly on a level playing field. So we see responsible tax conduct as not just about businesses paying their fair share, it's also about enabling business to compete fairly. And inch by inch, we've made some good progress. So you may have just, for example, seen just this week, we've had commentary carried in the Financial Times, the Times and the Daily Mirror on everything from the surge in small business tax evasion, which the National Audit Office put down as 5 billion a year alone, through to the recent win by the European Commission and Apple, who are going to force them to pay Ireland the 13 billion in back taxes, which they should have paid originally. So we're commenting. But by and large, we're trying to celebrate the good guys, argue for pragmatic, incremental changes in the law. And inch by inch, I would suggest that we're actually winning. So since 10 years ago, when we were established, 10 years ago, corporation tax payments in the UK were about 41 billion. They're now worth in excess of 100 billion in terms of a contribution. And that's a combination of an increase in the headline rate of corporation tax, but also some, not all by any means, but some of the tax loopholes that were available for businesses to dodge tax have been closed. There's still much more to be done. So, for example, the UK sits at the centre of what some people call a spider's web of overseas territories and crown dependencies, people like the British Virgin Islands, the Caymans, Jersey. And in some ways, much of the illicit behaviour has been simply shifted to these overseas territories and crown dependencies, such that possibly a quarter of all the world's corporate tax dodging is centred around the UK and these crown dependencies and overseas territories. So there's a real truth to the fact that if we fix this in the UK, it doesn't just benefit the UK, but it, for example, it really benefits communities in Africa and Latin America, for example. And that's why Oxfam are very keen to be involved with us for that particular issue.
Oh, right. Okay, well, that's really interesting, actually. I hadn't appreciated the knock-on effects internationally in terms of sorting out the regime and the legislation and what's permissible in offshore dependencies in the UK. So that's really interesting to note. Just I'm couple of things actually, Paul. I'm interested to understand a bit better. Is can you talk about what the broad approach to the larger corporations and the smaller corporations is? What's the difference there? Are you I mean, you said that tax avoidance, would you call it evasion, is just as rife in the small business sector as it is in the large business sector. Is that correct?
Yes, it's not only correct, but the evidence strongly supports that, although it's not an opinion you will hear said often. That, sometimes people operate with the big business bad, small business good mantra, and in many cases that's true, but it's also true that there are many good big businesses and many not so good small businesses, and we are active in all those areas, but there are some common themes. And so, for example, whether you're a big business or a small business, we believe you should be abiding by the spirit as well as the letter of the law. In the same way, if you were approaching human rights, you would abide by the spirit and the letter of the law. You wouldn't argue on human rights just as long as you hadn't killed anyone. You deserved an award, for example. We're also very big on tax transparency. So whether that's a small business disclosing in the UK its financial statements, or a big business disclosing right across the world how much income, profits and tax it pays in every country, which is what fair tax marked businesses do. So if you look at the accounts of Lush, or if you look at the accounts of Orsted, or if you look at the accounts of SSE, you can see clearly in each country how much income, how much profit, how much tax, and why, if there's a shortfall, it exists. They provide a narrative as well as the data. And why this matters is there's a strong body of academic evidence to suggest that where tax transparency is in place, it leads to less aggressive tax planning. So, for example, the European Union a few years ago required all banks to produce what's called country-by-country tax transparency. Lo and behold, a few years later, their exposure to tax havens had decreased, the effective tax rate had increased. So this type of tax transparency is something that is pioneered by our businesses, and we believe has a massive knock-on benefit. And we're actually seeing it taken up by some governments around the world now in terms of legislation. So the European Union will require by 2026, as will Australia, that all large businesses embrace to a degree some of the types of things that the Fair Tax Foundation has always led on.
Brilliant. Yeah, awesome. Really good to hear about the big picture. I think one of the challenges for the FX community of investors, and we're getting some great questions coming through on the chat box now. It's kind of helping them to see the big changes that you're making through the legislation. Pragmatic and gentle, I think, is what you said, one step at a time. And working with the organizations that you're working with who embrace this. So I'm going to just hit you with a series of questions now, Paul, if that's okay, from the audience.
100% fine. Let's do it.
Okay, brilliant. Okay, so from the bottom to the top, we've got Colin. He says, Prof, I haven't screened these, so it's all live. It's all happening live. Professor Richard Murphy, the Taxing Wealth Report and Tax Research blog, etc., has emphasized that improper behavior by some small businesses and the related lack of HMRC resources to both support the righteous and investigate the unrighteous, in inverted commas, locally as well as at national big business scale, has created a significant shortfall in UK tax receipts that would actually fill the so-called black hole.
I think so. I think what we've got there is Colin agreeing with, is quoting a source that would agree with our analysis that even with all the improvements recently, there is still much to be done with both big and small business in terms of closing what's called a tax gap. One of the things I think we're quite unique on, though, is one of the reasons we argue this should be done is to help other businesses, because how on earth can they compete? Operating, for example, a retail business on the high street right now is hard at the best of times. Well, how can you compete if some so-called competitor is constantly opening and shutting the business? Right. It's impossible.
Yeah, that's the race to the bottom, isn't it? That's what you're talking about here. The race to the bottom is that if the big boys are doing it and getting away with it, then it sort of forces everybody else's hands, right?
Yes. Okay. So if I look at Mark's question now, I'll just try to make some of the time out.
Let me read out the question, Paul. Let me read out the question because we've got plenty of time, so we don't need to worry about that. So that's all good. So Mark says, "Hi, Paul. Really support the cause that you're championing here. Do you have a good sense about how much impact the fair tax mark specifically has had in shifting the wider conversation around taxation? And what do you see as the main methods through which fair tax drives change?" And in commas, he asks, "And are any of these measurable?" Great question. Can you subjectively answer the question? And can you sort of quantify the impact?
Yes. So obviously we are one of a number of influencers along with our businesses, but I do think the fact that 10 years ago there was a serious conversation in the UK about ending corporation tax, and there was this vision that the UK should be this tax haven off the coast of Europe, much like Singapore operates in Southeast Asia. It was a very real conversation, and the corporation tax take in the country was falling. And now here we are 10 years later. I think the UK now has a higher headline rate of corporation tax than any Scandinavian country. The amount of money that is coming in now has more than doubled and will be tripling quite soon. The UK was one of the first movers to back the global minimum tax that will operate around the world. And we did a lot of time and effort pushing what was then Rishi Sunak when he was the Chancellor, and he hosted the first G7 meeting on that. So we think that what's happened in the UK is the conversation has changed now from one of keep cutting corporation tax because somehow magically all that investment will materialize as extra wages in the economy, etc. There's actually no evidence for that, into a world where in the UK that there's almost a consensus now that across all political persuasions that business should make a fair tax contribution, and that business sectors that are enjoying undue profits, if we want to put it that way, should make an even bigger contribution. So, for example, oil and gas, when we had the awful invasion of the Ukraine, we saw oil and gas profits go through the roof. And so an excess profits tax was added in addition to the corporation tax. And that would have been unthinkable a few years ago. So I think we and our businesses standing up for making a contribution and being proud to make a contribution has had an impact right across the political persuasion. In the same way, when we have our fair tax councils pass resolutions, we've had councillors of all political persuasions passing those resolutions. So one of the things I think we take quite a lot of pride in is that the tone of the way we conduct ourselves and the way we use solid evidence is such that I think it means that our arguments are open right across the political spectrum.
Yeah, brilliant. That's great. Yeah, so some real heavyweight change in the conversation, feeding through into changing of mindsets in the political class and also in the corporate classes. And obviously there are organisations that want to embrace this paying a fair tax because they understand the contribution that it makes to society. And at the end of the day, healthy society is a healthy economy, and the money all goes around, doesn't it? So question from Jerome. He says many institutional investors are now embracing ESG principles. However, many of those will be applauding legitimate corporate tax minimization. How do you change that?
So that's an excellent observation. And I would say 10 years ago, even the most progressive socially responsible investment funds were quietly operating in the belief that not paying tax was good for them. But that's changed. And we have an excellent relationship with what's called the United Nations Principles of Responsible Investment. And we've been working with them to point out that businesses that are involved in aggressive tax avoidance are almost certainly also involved in other aggressive behaviours in terms of legislative compliance and governance. And we've even produced a think piece which we presented to dozens and dozens of institutional investors and asset managers right across the world. And there is an emerging consensus now that tax avoidance is actually a red flag for other issues. So if I give you one example, it would be like the big Swiss bank that went bankrupt a few years ago. I can't remember that it was Credit Suisse, but I think it was.
I think Credit Suisse got bought by UBS for £1, didn't it? So
yes, and they had a history of tax avoidance. And then lo and behold, it turns out that their financial reporting was fraudulent. Is it a surprise? And we're now tracking the links between businesses that are aggressive on tax avoidance and are aggressive in other areas. And what I would say is the conversation has mushroomed in a really positive way. So Nest, the default pension for the UK, actually now pushes for its investees to be fair tax mark accredited. And I was passed a message about an hour ago to say that the Church of England has just released a push on the FTSE 100 just today on making sure people pay the real living wage and is questioning whether they are fair tax mark accredited. So our accreditation scheme has become a real trusted label of whether somebody is doing the right thing or not. And we're at the beginning of the conversation, but we have genuinely now got a number of big institutional investors and asset managers, not just in the social responsible investment movement, who are interested in this type of consideration.
Brilliant, excellent. So really talking to the asset owners who are obviously key stakeholders in the whole corporate world. So to be able to engage them and work with organisations like the United Nations Principles of Responsible Investing, that's kind of puts you right at the top table, doesn't it? So question from Pauline. She asks, how are companies like Amazon can we show evidence that they are avoiding tax as getting local authorities and trade unions to use companies that are paying their share of taxes? Not 100% sure that I can extract the meaning from that question, but I think what Pauline is making an allusion between how does fair tax think about Amazon and fair pay and trade unions and this whole issue of tax avoidance.
I mean, from our analysis, and we produced a number of pieces on this. I mean, tax avoidance is practically hardwired into Amazon the way it conducts itself. The fact that, for example, half of its UK income is still booked in Luxembourg. That's of the UK income. In an enormous subsidiary there, which always makes a loss, and which has got carried forward losses that will go on for many years, which essentially means no tax is due. So one of the things we've been pushing for with our councils and in the public sector is that public procurement legislation should be changed to allow councils to factor in a business's tax conduct in when they're looking at social value, in the same way they would factor in whether they're paying a real living wage or whether they're helping them contribute to net zero. We believe that tax conduct should be an explicit allowable factor. And we've been in a number of conversations with the previous government and this government, and we've been promised that that will be looked into. And we've been asked for further proposals in that area. And why it matters is that, again, if businesses can see that being a responsible taxpayer is in their interest, then we will see a mushrooming in the same way that the real living wage has required those type of levers to help them with the growth that they need to take place. We've made sure where possible, we've got really good relations with people in the fair trade movements and the living wage movements who've been very kind and open with us, sharing how they've managed their growth and how they any pitfalls that they encountered in their history and how we might avoid those pitfalls as well. And that's one of the reasons, for example, on our board, we have the previous chief executive of the fair trade movement internationally, because we want to make sure we learn from our friends and allies in other areas of social accreditation schemes.
Brilliant. Okay. I'm going to ask just summarize what you said, and it sounds to me as if you're helping create a level playing field in local economies via the purchasing power of local councils, so that you can legitimize the choices that they make, so that they can avoid the most egregious practitioners of tax avoidance, and thereby help to lift all the boats in the community. Is that correct?
Without a doubt. So one of the things that we've been very active campaigning against is this idea of free ports in the UK, and this idea of investment zones where businesses are invited to establish themselves and regulation is just burned, paying tax is just burned on this zealous belief that a free-for-all will somehow benefit everybody. Well, we've provided the evidence against that. We've worked with many councils to be against that. So, for example, Greater Manchester Combined Authority basically said to the government, if you're going to give us money to encourage investment, we're going to spend it on universities, roads, rail. We're not going to spend it on corporate tax breaks. And that's something we passionately agree with. And we help build the evidence base for that as well. Another council we've been working with a lot is Westminster, Westminster was a hub previously of hot Russian oligarch money, illicit finance that had been squirreled into the borough, into property. It was also, people may have heard, these candy shops that would appear on Oxford Street, this was part of the phoenixing phenomena I told you about, where the same people work in the shop, the same people effectively own the business, but the business behind the business is constantly burned away in order to grab the income but not honour the debt. So we've been working with everyone from Westminster to Manchester, Edinburgh, 60 councils across the country to look at how we join up good businesses, social value, procurement, and a thriving commercial sector that pushes out the illicit finance providers.
Brilliant. Paul, I'm going to ask you one more question from Linda, and then I want to get back onto the script and ask about what you're doing the community share raise for, you know, what you're planning to do, a vision of the future very much grounded in the reality of the past. So Linda's question is, so hang on again. Linda's question is, does or will the Fair Tax Foundation have any links with Positive Money, founded in 2010?
Yeah, so the Fair Tax Foundation has very good relations with other organisations in the UK tax justice movement, people in the European tax justice movement, and people in the global tax justice movement. And we all share intel, aspirations, visions. One of the things we are, though, is we're different from some of the others. If you imagine the environment movement and you've got Greenpeace at one end and WWF at the other, and you've got Greenpeace locking onto oil refineries, and you've got WWF doing some more cuddly stuff, we're towards the cuddly end. Our tone, our positioning, the way we work with business is to gently urge them to come into the public debate, to not just be responsible taxpayers, but to talk about it, to advocate for it, to actually be really proud on the money that the activities provide, whether that's James Timpson when he was Chief Exec at Timpson's, or Julian Richer when he was at Richer Sounds, whether it's the co-op. We're very keen to gently ask them to enter this space. One of the other big things we've been doing is there is a very large number of businesses who pursue the fair tax mark who are deeply involved in the pursuit of net zero, offshore wind providers, onshore solar providers, etc. And one of the reasons they do that is they fully appreciate that if we don't get the tax regulations right and we don't get the levers right, it could derail the pursuit of net zero. So for one example, without getting too geeky, we would argue it makes sense to have enhanced capital allowances and accelerated depreciation for investments in wind turbines and solar PV systems. And what that does is it slightly alters the investment criteria to make those type investments more likely and further investments in fossil fuels less likely. Now, it's geeky and it's nerdy, and we talk to politicians and they go, really, is it that big a deal? And then what we can do is bring out businesses who say, actually it is. And we will look at financing that offshore wind scheme in that country, but not that country, because of the way they've got the tax regulation set up. That's something we take a lot of pride in terms of trying to be the bridge between the pursuit of net zero and tax justice, where there is a requirement for a degree of understanding of accounting and tax systems.
Yeah. Okay. Brilliant. No, I get all that. As a nerdy economist in my previous life, and you know, really good to hear that there are other levers and pulleys that you can communicate, you know, into the wider political system to get, you know, these optimal decisions for net zero. I hadn't actually thought about that link straight off the bat. Ian asks, how will the funds raised through FX be used by Fair Tax Foundation?
Yeah, so effectively like I say, we've enjoyed 10 years of virtually straight line growth. The last 7 years have been one of surplus, but those small surpluses aren't enough for us to go big bang. So that's why we want to do the community share raise. the board and the senior management team are quite keen not to miss the opportunity that's opening up. So what's happened out there in the market is that after being an issue out in the cold, you can't move now for people who are selling not tax avoidance, but selling tax compliance and progressive tax conduct. But many of them are selling it at a really, really low level. The one thing about the fair tax mark, I would say, is that it's a very rare business who comes to us and on their first assessment gets the fair tax mark. They normally have to do a number of things in order to pass. So it can sometimes take a business a year to secure a fair tax mark. It's even taken 2 years for one business because the changes had to be ratified at a board level. So why that matters is that in order to get the growth through the market, we need to make sure that we are adding value, not just chasing growth for the sake of it. So one of the things that started to happen is that from being cold-shouldered by virtually every one of the big four accountancy firms when we began, we have now started to build strategic relationships in certain countries where one of the big four is really progressive. So, for example, in 2 weeks, Deloitte in Spain have asked us to go over and speak to a large cohort of their businesses. In November, KPMG in Denmark have asked us to do the same. We will only work with the professional service organisations who are at the leading edge of being progressive. We won't work with them per se. But the reason they are all entering this market space now is 2 big pieces of legislation that are coming out of Europe, and they affect any large business that has any type of foothold in Europe at all, including UK and US businesses. And one of those pieces of legislation, without getting too technical, is called a CSRD, which will affect about 50,000 multinational enterprises across the world. And it effectively means that any large business operating in Europe or the UK will effectively have to discuss the degree to which it complies with the letter of the law or the spirit of the law and the governance and compliance systems they have in place. So once that piece of legislation comes into being, and it really is, businesses are prepping for it in 24, so it can be enacted in 25, and we will see the repercussions of it in 26. It's created an enormous market for consultancy services. So one of the reasons we believe we need to scale up now is that if we don't fill the vacuum that's going to be created, other people will, and they'll do it well, but they won't do it very well and with integrity and with a vision of trying to end the global race to the bottom on corporation tax and in fact flipping it the other way. So without the investment, we can't do that. The way the money would be invested is literally increasing the size of our team by a factor of 2 to 2.5, beginning with building a professional business sales unit. Every single bit of business we've done up to now is walked in the door. We've never done any proactive sales because we never needed to. In the past, we were quite content with our linear growth, but we do feel now we're in a stage 10 years in that we can make the next leap. And to do that, we need basically a new business development and sales function, more professionalized back office. And then as the exponential increase in sales manifest, we will then have a plan to just add the number of technical people we've got who can work with the businesses in a manner that's with integrity.
Yeah. So one of the things I really like about your business model is that you have a very, very high percentage of repeat sales, 90 to 95%. Could you just walk us through that, what it means for you, for the business, for your clients?
So since we began the fair tax mark in 2014, 10 years ago, we've only lost about 17.5% of the businesses that we've accredited over that 10-year period. And some of that was because businesses merged. Some of that was because a business went bust. Some of that was because a business just self-retired. So I think if you compare that with many other schemes, it's right at the top end. So what we've got here is a product that business doesn't just buy 1 year, because you have to get the fair tax mark assessment every single year and it's the same price, because we have to do the same amount of analysis every year. That we've got a product here that once we get the business, they invariably stay with us. The trick is how we increase the volume of business to begin with, because the repeat sales are just there.
Yeah, brilliant. And that's a sign of a really, really good quality product and a really good service, well delivered in my opinion. So okay. That's really helpful, Paul, in terms of walking us through what the money is going to be used for. Largely it's sales, business development, professionalizing the back office, and then you'll add on technical bodies as the growth emerges. So that's pretty clear, I think. So far, so good. You've raised about 130,000 with us, including 100,000 of grant money. So off to a really, really good start. Can you so the Fair Tax Foundation has a growing number of member organizations. Can you name some and tell us how you support them, just to try and kind of bring that value add to the client home to the audience?
Yeah, so we've got everything from FTSE listed businesses such as SSE, the green energy generator, Jupiter Fund Management, FTSE listed. One of the early pioneers of social responsible investment, Gleason, big pioneer of and provider of social housing, affordable housing. Marshalls, do business to business, basically hard products. Watches of Switzerland even, which might seem a little bit surprising. I've been very keen to make sure that people understand that they are progressive on this issue. But all of the listed businesses, investors tends to be a key audience. Another big hub of activity we have is retail, whether that's Timpson, Richard Sound, Eurocell, or even Lush right across the world. And that's the type of thing where if you go into a Timpson shop, hopefully if you look behind the counter, you can see our logo there, because they're very proud of their fair tax accreditation. Financial services is another hub for us. Building societies such as Leeds, Coventry, Earl Shilton Ecology Building Societies are all fair tax mark accredited, as is Unity Trust Bank. Co-ops and social enterprises were very much pioneers early on. So whether that's Mid-Counties, Scott Mid, Energy for All, Suma and the Co-op. Very recently we had Arup, the large architectural firm, became accredited, the employee co-op. Gerber Camper Vans up in Scotland, a radical social enterprise. So we have these hubs of activity. We've now started expanding abroad, as I alluded to, Vattenfall in Sweden and Ørsted in Denmark, Unite Germany, Fortum Finland, Agrifair, a provider of wholesale bananas across Europe, including the UK, in the Netherlands. We'll very soon announce our first Spanish businesses. And our support for these businesses, our engagement with them, can be something as simple as getting them involved in Fair Tax Week, talking about what they do, why it matters, celebrating it internally within their company and externally with their partners. But it can also be something to be a bit more bespoke. We're working with a number of our businesses, as we've just discussed, about public procurement reform and why it needs to happen to enable the public sector to leverage things. And another type of bespoke activity we have is where we work with our large renewable energy providers and small to argue that the tax system must align with the net zero aspirations if we truly want the investment that we all do want from the private sector in this area.
Yeah. That's great. Thanks for that answer, Paul. I'm gonna finish questions from the audience. One final question from Mark, and then we're gonna wrap up with a call to action from Paul, and reminding the audience that the offer is live on the FX platform. So Mark asks, and I think you touched on this or alluded to it, how crowded is the social accreditation space? Do you have any concerns that other providers could subsume the space that FTF occupies for businesses if, for example, B Corp added similar tax accreditation or living wage or fair trade, etc.? from what you said, it sounds more collaborative than competitive, which is good. So if you could answer that question, please, Paul, and then we'll start wrapping up.
Yeah, so I think I would say two things. One is tax is complex, and so if you're going to venture in, there was a reason people hadn't dared to venture into this place in the past. It's because it's complex. And even if you look at things like the living wage accreditation scheme, it's basically a pledge without an audit. A business pledges to pay the living wage. It pledges that its suppliers pay the living wage. There's no real checks. We audit the business every year. We actually find mistakes in the financial statements that the auditors, the official auditors, didn't even pick up, and we take with great glee when we do that and inform the clients. People like the B Corp movement, I think that is a legitimate question. Right now, they don't assess tax in a meaningful way whatsoever, and I cannot ever envisage that they would have the expertise to say whether a business did or did not.
Yeah, sounds more like a channel for your business than anything, to be honest.
Yeah, and that's why, for example, one of the big ones is the Global Reporting Initiative, which urges businesses to report on all aspects of their sustainable development, including tax, and they've created a standard for reporting tax. Actually said a few weeks ago, look, after you've done our standard, if you want to go the extra mile, go get a fair tax mark, because at the end of the day, that's the thing that's really going to resonate. Somebody standing up, an independent third party, saying, yes, they are doing what they say they do. So as it is right now, we don't see any real challenges to our accreditation scheme. Our worry is simply that if we're not in a country having a conversation, or in a sector not having the conversation like the UK, somebody else will simply fill that vacuum, because that's the way business works.
Yeah, and that's why it's so important to get the money to develop the business right now, to catch the wave, right?
Yes. So it's like I say, it's this, with this sweet spot of this legislation that business is preparing for in 24, to enact in 25, that we will see in 26, and then 26 will be this year, hopefully, where everybody goes, whoa, there's been this massive surge of data that we can act on, institutional investors can act on, civil society can act on, even the likes of Amazon may be forced to actually, for the first time, disclose how little or no tax they pay in the UK, because the legislation forces it to happen. That in itself, as I discussed before, will create pressure for them to change. We are there to help them change and move them forward. Yeah,
brilliant. Excellent. So that, if we can finish on that note, and I'm going to say, thank you very much to Paul, a real tour de force, making a complex subject very digestible, and really explaining the impact at home and abroad, and really brilliant. That's been a real education for me. So thanks to Paul. The offer is live. Please do take a look at it. Already at 121,000, just over, with 100,000 from a very well-known foundation in the UK. So brilliant to get that backing as well. We'll send more information and a link to this recording. So thank you once again for your time, and all that remains to be said is for Paul to say his goodbyes.
Thank you, everyone. I'm so sorry about the video thing at the beginning. We'll find out what happened. It is not normal, I assure you. We are normally a very, very super slick, efficient organisation for our size. I am sorry again for that so much.
Thank you, Paul. Thank you so much. Thank you, everybody. Goodbye.